When the stock market gets unpredictable, physical assets that produce a steady stream of cash become the primary alternative for many investors. This real estate teaser is for a 14-unit property on Camellia Avenue in North Hollywood. In commercial real estate, a door is an individual apartment. At $306,000 a unit, the $4.29 million purchase price is divided by those 14 doors. Investors look at North Hollywood as a high-growth secondary market, characterized by rapid gentrification and significant transit development. Reading a document like this requires looking past the physical structure to see the specific mathematical income stream being offered. These teasers typically present two different financial realities side by side, creating a specific psychological hurdle for the buyer. The current column shows the building as it operates today. In this case, that's a 5% capitalization rate, the annual return you'd expect on an all-cash purchase in a stable market like Los Angeles. The market column represents a theoretical projection. These numbers show what the building could earn if every unit was renovated and leased at today's highest possible rates. This gap is called loss to lease. It represents the missing revenue between what current tenants pay and what a new tenant would pay today. Buying this property means taking over the seller's existing low-interest mortgage provides a significant advantage when current market interest rates are high. However, assuming this debt requires paying out the seller's equity in cash, which usually results in a much larger initial down payment. The second lever is operational, known as RUBS, or the Ratio Utility Billing System. Instead of the landlord paying for all utilities, RUBS bills tenants for their share of water, trash, and electricity based on their unit square footage. This effectively lowers your operating expenses and increases the net operating income without a formal rent increase. The trade-off is the administrative burden and the potential for friction with tenants who are unaccustomed to paying for their own utilities. These levers are powerful because they improve the building's yield through management and financing before any physical renovations begin. Closing the remainder of the gap requires making physical changes to the property and addressing the existing leases. The teaser highlights ADU potential, which refers to building accessory dwelling units on the lot. Building these units transforms this into a 16-door asset, creating entirely new revenue streams on the same plot of land. This requires securing permits from the local planning department and deploying significant upfront construction capital. The most direct path to the market numbers is simply closing the loss-to-lease gap by raising rents. This path leads directly into Los Angeles rent control regulations. Legally, an investor is prohibited from raising an existing tenant's rent to the market rate in a single step. Capturing that revenue requires waiting for organic turnover or negotiating expensive buyouts to vacate the units. Reaching that final market NOI target depends on a long timeline and the constraints of local law. The market column represents a multi-year, capital-intensive business plan, rather than an immediate financial reality. An investment teaser represents the potential of a property, though it often takes years of active management to realize the projected cash flow. We can map this property onto a matrix of effort versus return to see which investment strategy it actually fits. The bottom left quadrant is for the buy and hold investor. These are capital preservers. They are comfortable with a steady 5% return and view any future rent increases as a secondary benefit. The top left quadrant represents the trap. This is where a novice investor expects high market returns immediately without performing any of the operational work. The realities of rent control and the costs of construction will likely result in missed expectations for anyone seeking passive income here. Finally, the top right quadrant is for the value-add operator. This property serves as a perfect canvas for an operator who has the capital for ADU construction and the patience to navigate the regulatory environment. In commercial multifamily real estate, achieving a market yield usually requires